Is your group disability insurance policy enough? Or does every doctor need an individual disability insurance policy too? Keep listening to find out. Welcome to the Money Meets Medicine podcast, where we talk all about the personal finance topics you wish you had learned in medical school. I'm your host, Dr. Jimmy Turner, and here's our guest host and my partner in crime at Money Meets Medicine Disability Insurance, Mike Kittner.
Hey, Jimmy. Glad to be here. Glad to have you back on the podcast.
Yeah, it's good to have you, man. We're actually recording in the same room, so if you're watching this on the YouTube channel and you see me look that way, it's because Mike's over there.
Or me, I go like this.
That's right. Yeah. Little awkward looking into the camera sometimes when the person you're podcasting with is actually in the same room.
Yeah.
So, but yeah, Mike, we haven't had you on since I checked. So literally the beginning of January. So it's been 4 months.
Oh wow! All right.
Yeah. So it felt like a good time to bring you back on the show. How you been doing?
Great. Hey, I want to interject here. I've really enjoyed you and Justin on the podcast. You know, just the podcast about the social investing. That was such a niche topic that I was really fascinated by that. That was a really good episode.
Yeah, thanks. I appreciate it. It's been good having Justin on and having a financial planner's perspective on all things physician finance. So he's, as far as I know, been enjoying it and planning to stick around.
The feedback's been great too during our consultations, talking about the podcast. That people really resonate and appreciate everything you guys do. So yeah,
good to have the feedback. Well, on the show, Mike, we're going to talk about group disability insurance. And part of the reason why is because, we are asked about this all the time. I get questions about this. You get questions about this. You review group disability insurance policies all the time for people and, trying to help them understand what they have. And hilariously, most doctors don't know anything about the group policy that they have. So I think that this show is going to be particularly helpful for people. And since we're specifically discussing disability insurance on the show, the thing I always say to people, right, is that protecting your asset is your number one financial task for a doctor, because we can and try to teach everything about personal finance, including investing and paying down debt on Money Meets Medicine. But it turns out that none of that matters without disability insurance, because if you don't have an income, you can't do any of those things. So as you listen to the show, if you're looking to get quotes on your own occupation disability insurance policy, when you find out that your group policy is not enough, maybe it is, learn more about that in the show. You can do all of that. Get your quote at moneymeetsmedicine.com/disability. And you get to talk to the voice you're hearing today, Mike Kittner. So that will hopefully be a good experience for everybody. And in fact, I know it is, because I've heard glowing reviews about you, Mike. So
I appreciate that.
Yeah, man. Well, let's dive in. So we're going to talk about group disability insurance. And a big reason why is because you have to kind of stack these in terms of, protecting your assets. And it's really been interesting to me, and you've educated me a lot on this, finding out that some group policies are actually really good and some group policies are not so much, and so really kind of diving into that topic is important, because we get asked all the time, hey, is my policy that I have from the AMA or is my employer policy good enough? And you have to answer this question pretty regularly. So tons of questions about it. And I think a good place to dive in is just a big picture, just to catch people up. What is long-term group disability insurance, and how is that different from an individual policy?
Right. So, this is a really good time too, as we, a lot of graduates are going into the field, they're doing their onboarding, they get their, packet from HR and they say, wow, I got group long-term disability insurance up to $20,000 a month. So when we have our consultations with even older attendings, and they see that number, they're like, I need you to tell me why I need individual insurance. And I say, absolutely. And, the answer is you might not.
Right.
If you're a young attending, or certainly someone coming right out of residency, if you look at your financial plan, which you and Justin talk about a lot, if you think of a triangle, that bottom part is insurance. I mean, that's just how it is. You need insurance for your car until it's paid off. You need insurance for your home. And the purpose of insurance is just to protect something. And with disability insurance, it won't always be like that. At some point, you can kind of, flip that triangle upside down, so to speak, and disability insurance becomes a smaller part of your overall financial plan. But for most people, it's a necessity. And so when we think about group and individual coverage, how I do this during consultations, I tell my clients that I want you to think of two different buckets. So in one bucket you have your group employer paid, traditionally employer paid, long-term disability coverage. And in the other bucket, you have what you got and purchase on your own, you work with somebody, and that is your own individual policy. And the purpose of those two is to work together to try to replace as close to 100% of our post-tax income as possible. But they are made to work together. Individual insurance used to be called supplemental insurance because it would supplement some of the pitfalls of group that we're getting ready to talk about.
Yeah. So hopefully you kind of understood that. You're going to basically combine your group policy with your individual policy to basically make you whole if you get disabled. And I think that's really important to highlight at the beginning of the show, because a lot of people are like, hey, I've got this group policy. Why do I need it? Well, because the group policy wouldn't cover all of the income that you're taking home, and it covers you in a different way. And so I think the best place to start here, Mike, is talking about, an own occupation definition and how that's sometimes different in a group policy. And interestingly, one of the things you educated me on is that there are group policies out there that are in fact own occupation that are pretty good stuff, but they are, in my experience at least, less common. So what is a true own occupation definition, and how does that differ from a typical group policy?
Yeah, so when, that's the first thing that we traditionally look at during a consultation when we do a review of group plans. Let's look at our definition of disability. And most employer plans, most group plans kind of read the same. It'll say definition of disability, own occupation. And so the attendings and clients think, oh, well, it's own occupation. Well, there are actually 3 different versions of own occupation. So we have to flip to the definition part of the 40-page contract. And I say, let's take a look at this. And traditionally, what we'll see are 2. We do have a few that are true own occupation specialty specific, which means that if you can't perform the material and substantial duties of your specialty, then in the eyes of the insurance company, you are disabled and you will get your monthly benefit. What makes it true own occupation is you then can go out and work for wage or profit doing something else. And you don't have your benefit compressed or offset. You can double dip, so to speak. Mm-hmm. That is very uncommon in group plans. The majority that I go through fall in the other 2 categories. Most of them fall into this next category, which is true own occupation, not engaged. So what this means is that if you can't perform the material and substantial duties of your specialty, you are disabled and you'll get your monthly benefit. Mm-hmm. However, you then cannot go out and work for wage or profit. If you do, we will compress or offset your benefit dollar for dollar. So, if you're a proceduralist and you injure your hand and you're considered totally disabled, and then you go into telehealth or consulting or come over here with us and, sell disability insurance, and you earn an income doing that, your benefit from the insurance company is going to be offset dollar for dollar. And if you make it to 80% of your pre-tax or pre-disability earnings, then you get 0.
Yeah, I think that's really important to highlight, because a lot of doctors listening to the show, one of the things that people are interested in when you dive into personal finance in the physician space is the potential to create multiple income streams. And so for me, people ask me all the time, and I always share my story, right, of getting basically denied own occupation disability insurance, which hilariously looking back wasn't own occupation disability insurance. So not only did I apply for the wrong kind of policy and get denied, which prevented me from getting, the guaranteed standard issue policy that we've talked about in the past, where they don't look into your medical history. I ended up applying for a medical occupation definition policy that wouldn't have covered me. And, it's interesting because I have created this business and I do make money outside of medicine. Basically, my group policy is pretty much worthless at this point, or not worthless, but it's definitely not as valuable as it would have been, at least in times past, because I make money outside of medicine. It would just reduce whatever benefit I'd get anyway. And so I think that that's something that people often miss, right? So if you plan on making money from even real estate, right, it's something outside of medicine, or you plan on having some sort of side gig, or you're making money in some other fashion doing chart reviews or medical malpractice work, they're going to reduce the amount of money that they pay you for a benefit. Is that right?
That's correct. So the phrase I want your listeners to remember is at the time of claim. So if we do proceed with a claim, you're going to remember that phrase, at the time of claim. And what the insurance company is going to ask, what were your material and substantial duties and your occupations, so the material and substantial duties of those occupations for the last 12 months. And so you're correct. The more you are having an outside income supplement what you're making from medicine, it will invalidate different parts of the benefits of, both your group plan and your individual plan.
Yeah. Okay. That's super interesting. And another thing to point out to listeners is that oftentimes a group policy won't come with you. And in the disability insurance world, it's called portability. And so, for example, say I'm in academics and I consider changing to a private practice job, and I had a group policy where I am. If I leave and that private practice doesn't have a group disability insurance policy and the one that I had wasn't portable, which oftentimes in a group policy they're not, then I would lose all of my coverage in my situation because I can't get individual insurance since an insurance agent didn't do the right thing for me. But a lot of people don't realize that, that group policy oftentimes won't come with you.
Right. You'd have to look at your group plan specifically, not the brochure, because, some group plans do have some sort of conversion provision built in where you are allowed to take it with you. And I can't get into the details on that because every one I've looked at has been different. The majority of them, they're each one's plan specific, but for the majority of them, they stay a group plan. So the benefits that are inherently in the contract at the time of the conversion that you take with you, they will remain as a group plan. So you don't get the benefits of an individual policy. And we're going to go back and forth here a little bit. So we're going to highlight, some of the pitfalls of group. And I want your listeners to understand that your own individual insurance is the exact opposite. So, where your coverage for your group plan isn't portable and tied to your employer and your specific job, your individual plan is going to go with you no matter where you practice. And even if you don't practice. If you got bored of being an interventional cardiologist, which I don't know how you would, but if you did and you became a fireman and you fell down a ladder, for the last 12 months you've been a fireman, what's the phrase? At the time of claim. As long as you've been paying your monthly premium and your policy is still in force, it will cover you for the material and substantial duties of that occupation of a fireman.
Yeah, that makes a lot of sense. And it is something that's often overlooked. Is the reason why it's called an individual policy, right? Is because you own it, right? So, if you leave, it comes with you. If you keep paying your premiums, it's non-cancelable, like it doesn't go away. Whereas a group policy, like your employer can be like, hey, we can't afford this benefit anymore. We're getting rid of it. And, it is customizable. So all of the things you'd expect, it's kind of like going and getting a car, right? Like you can show up and just get whatever car has been created by, Cadillac or, Honda or whatever. Or you could actually order a car and customize it to your specific specifications that you want in that car. Whereas a group policy, it just kind of is the way that it is and it applies to everybody. It doesn't necessarily come with you. It isn't customizable. They can cancel it or get rid of it at any time. And that's true for like large organization policies too. Like, so the American Medical Association, for example, they've got a policy that every physician known to man has received communication about, whether it's email or snail mail, what have you. And that plan at any point can be canceled. And so you think you're covered. And then all of a sudden the AMA is like, hey, we broke up with New York Life. We don't know, we're not offering this anymore. And the individuality is important in a lot of different ways.
And you want to go back to and not look at the brochure. You have to get the contract because the brochure is going to read own occupation. And then you get into that definition of own occupation not engaged, or one that's worse is own occupation for 24 months. And that means that if you can't perform the material substantial duties of your specialty after 24 months, then they look at based on your education, training, and what they'll call transferable skills. So you'll have to do a transferable skills assessment at that time. And you're well educated, you're a physician, you've gone to college. I mean, you can just go down the lists of, jobs and careers that you could basically obtain, and the insurance company is going to hold that over your head and refuse to pay you your benefit based on those jobs that are available to you. I got a funny story, okay, Jimmy?
Yeah.
I hope this isn't true, but I read it this one time. Group plan, carrier, I'm not going to name the carrier, but the client had chemo or a lung transplant. I can't remember what it was. And it was after 24 months, and he had an any occupation clause in their definition of disability. And the insurance company said because he had a driver's license, he could work for Uber. And they held that against him and refused to pay a benefit or deducted it, or however it ended up working out. But listen, the group policies are not made for you. They are standard for everybody. They're free. It's a great first line of defense. Most of the times you have to enroll, and they automatically enroll you because that's an agreement that the insurance company has with the employer. Otherwise, who's going to show up? Who's going to sign up? Just the sick people.
Yep. And I think that's really important to highlight too. So I keep saying that because I think this entire show is really important to highlight. But a group policy, and really honestly any insurance company, and I'm not going to rag on the entire industry. I don't think that it's meant to be this way necessarily, but it is a business, right? And so an insurance company's job is to only, pay out that benefit if you're truly basically disabled based on their definition. And the wording in that contract is very specific for a reason, right? So their job is to evaluate if you've been disabled based on their definition before they pay you. Because if they paid everybody for every claim that they could possibly submit,
right,
obviously the insurance company would go broke and there would be no such thing as insurance. And so these policies, you have to be really careful about these definitions and how they're worded, and like the 24 months, and like, does it keep paying you? Like, do you have to get this reassessment? All of those things are fundamental to knowing your coverage. And unfortunately, at least for me as a busy physician, I'm not going to lie, I've never read through my policy. I've never read through my group policy.
No one does. No one reads that.
Yeah. And so that's why we have you, Mike, so you can read through the policy.
Yeah, that's true. Yeah.
Yeah. So, but big picture, you're combining your group with your individual. And so let's say someone comes to you, Mike, and they're like, hey, I've got this group policy at hospital XYZ. And, I'm just curious, like, do I need individual coverage? How do you start that conversation? How do you have that?
Sure. So the first thing that we're going to talk about is that 2-bucket scenario. All right. And every one of these negatives that I say about group, I want you to think of a whole. And in that bucket is your income, up to $20,000 a month. And for every one of these holes, that bucket's going to start to drain. And we're going to see that individual insurance is then going to come plug those holes and refill your income. All right. So the first thing that we're going to do is look at your maximum coverage, and it'll read something like this: 60% up to $20,000. And the phrase I want you to look at after the percentages, covered income or base income. Just did a consultation earlier last week for a physician, annual salary $425, anesthesiologist making $425. And we looked at her group plan, and it said clearly stated her base pay and her outlays for how she's covered in her contract. Her base pay was $300,000. Mm-hmm. So she's thinking she's making $425. We take that 60% of $300,000, and that goes to what? $180,000. Divide that by 12. And she's at $15,000. So she doesn't even get up to $20,000. Her maximum is $15,000 per month.
Right.
So that's $5,000 right off the top.
Yeah, and there are limits, like you said, like based on the specific policy, and they're all different. And so if you haven't read through your policy, the actual contract, then you probably don't know these things, and you think you're covered. And not only are you not covered because the group policy has some holes that need to be filled by individual insurance, but the number that you're expecting may be different than what the reality is. And is that also true? Like if someone gets paid, let's say they're a surgeon, they get paid on RVU bonuses every quarter. Is it the base salary the only thing that they take into consideration, or is it the last 12 months' pay?
You'd have to look at the contract, because we do have some. I have seen some that say total annual compensation. That is a minority. Usually I see the phrase covered income or base income. Those are the two most common. And that just gives the insurance company leverage to, basically let go of some of that money that they're going to owe you. But Jimmy, we're just getting started. So, that client had $5,000 right off the top. All right. So then the next thing I wanted to highlight is the elimination period. So typically with an elimination period on group coverage, it's 180 days continuous or total. That means that you have to go 6 months without going back to work at all. And they're serious when they say continuous. If you take 2 weeks off and you're like, doctors are tough-headed, right? They're hard-headed. They're going to go to work. They're going to push through. And, I've been out of work 2 weeks. I'm going to try it. So I go back to work 3 days. What happens to the elimination period?
It starts over.
180 days consecutive and continuous. With individual policies, it's 90 days. And it's not consecutive. You have an accumulation period of usually 180 days to get your 90 days finished. Guardian goes up to 210. But again, an added bonus for your individual policy. So we look at that. Can you go 6 months without doing 1 day of work before you even get paid a dime?
Yeah. So talk to me about, an individual policy, right? They've got these residual and partial disability riders that exist. And so let's say that, you are disabled for those 90 days, you meet your elimination period and you go back, but you're not at full capacity. Is that something that, an individual policy covers that a group policy might not handle the same way?
So there's some different nuances about it, but for the majority, I'll give group insurance a plug that I do see some residual built in there. So if you can't earn, usually it's up to 80% of your pre-disability earnings. At that point, you'll be considered residual.
But in a group policy, you typically have to go 6 months before that would even kick in. Because
Correct. Yeah, you have to be total and continuously disabled for 180 days. So that's one. That gets clients thinking about it. And then we get to the fun part. And this is a part of your contract nobody ever reads. And it'll be labeled deductible income or income benefit offsets. This is the fun part. So we go back to my client last week. She's now at $15,000. For a graduating resident or fellow going into $15,000, that they get seduced by that. That's a large chunk of money for anybody, and we can say that because we've been there.
Sure,
right? We've gone from the resident salary to the attending salary, and we see $20,000, and it's enticing, no doubt. But she's down to 15. Income benefit offsets. There's going to be a list of at least 15 of these items that the group plan, the group insurance carrier is going to use to compress your monthly benefit.
15.
At least. Workman's, I'll just highlight some of them, okay? Workman's comp, Social Security disability paid to you, a spouse, and your dependents. And they make you apply for disability. They make you apply for Social Security disability. If you don't or you drag your feet, there'll be a clause in there that they can withhold your benefit or they can estimate what it will be, and they can reduce your benefit accordingly. The average disability payment by Social Security is $1,400. For dependents, usually get half of that. So for you, if this were you, you'll get $1,500 taken right off of that $15,000, and then you have 3 kids. There's $2,100 gone right off the total. Right. All right. Third party liability payment. So think if you're in an accident, no fault insurance, unemployment benefits from state and federal, employer contributions to your retirement plan. And Jimmy, I can literally just go down the list.
Yeah. So those all get deducted from your quote unquote group benefit that you would get if you were disabled.
So we're at 15, right? And I'm going through her and I'm just highlighting, what it could get down to. And it's a safe bet that after all of the benefit income offsets, don't forget about the taxes. All right, 30% tax bracket, 30% right off the top. It's a safe bet that if you're totally disabled, you can expect to bring home anywhere between, I would say, 50 and 60% of your maximum monthly benefit. So when I had that consultation, now we're looking at 15. Well, I could probably live on 15. I could probably live on that. You got the taxes, you got the total income benefit offsets. You're looking at $7,500.
Right. Very different number.
Very different number. And so that just gets people thinking, all right, well, what am I supposed to do? That doesn't make me whole. I can't. That's where individual coverage comes in. So now we plug those holes of all those income benefit offsets. We refill that bucket with your annual income. And again, we try, those two work together. They're made to work together to try to replace 100% as close as we can of your post-tax income. Nobody gets rich off a disability claim, period. No one gets rich off one. The point is to make sure you don't go broke. Right. Bottom line. And you'll notice in your group plans, everyone, your listeners right there are going through their group plan right now, reading their, income benefit offsets, deductible income. I have not yet seen a policy that has an offset for a true individual disability insurance plan. They are made to work together. For those of you that have an AMA policy out there or another association plan or franchise plan, guess what? There's an income benefit offset for those.
Yeah. So
they'll do a pro rata share and they'll determine who pays what, but there will be an offset for those.
Got it. So it sounds like, a group plan by itself is a pretty leaky bucket, and then the individual policy comes in and kind of patches up all those holes so you can actually fill the bucket up to the extent that you need it to.
Yeah, that's the purpose of having both.
Yeah. And so real life scenario, right? So let's say that I make $15,000 post-tax each month, and then all of a sudden I'm going down to $7,500. I'm thinking about my own family right now, married, 3 kids, and I'm like deducting the things from my own personal life that I could get rid of to like lower our expenses each month. And as I think through that, and honestly, I've had to think through this because I only have a group policy because of my individual situation where I got denied and I couldn't get disability insurance and I still can't get it. And so, which is why I think this is so, so important, because I know what this is like when you can't. But when I think about our situation, part of our quote unquote disability insurance plan is having our minimum expenses, if we possibly could. Like if I got disabled, like what could we get it down to at a bare minimum? And with inflation and everything else going on, I mean, I can't take my kids out to lunch with my family of 5 out to lunch for less than $100. I feel like at the vast majority of restaurants now. And so the cost of living's skyrocketed. If I'm going to get $7,500, like I honestly don't think at this point with our lifestyle and our, $3,000 mortgage and the rest of it that we honestly could live on that kind of money. It would be a catastrophic financial situation that would require some very uncomfortable financial decisions for my family.
It would. And, to put your mind at ease, it's not always going to be like that. So when I'm talking to these clients, and we're talking about the income benefit offsets, the taxes, and, there's also a clause in your group plan that will also read a minimum. It gives you a maximum and a minimum, $100 or 10% of your, disability, payment before income benefit offsets. They give you that. They're going to give you $100 because it's a goodwill offer that depending on the amount of offsets, Jimmy, if you have a high, no fault insurance payment and, someone rented you and you got injured and they pay you, that if they pay you a lump sum, that's prorated over 5 years. So if you get $100,000 over 5 years, they're going to deduct that from your monthly benefit from your group plan. And so they say minimum $100 because they know that maybe that's the most you're going to get. Here's $100. Go take your family out to lunch once a month.
Yep. Yeah. No, it's really, really important to think about this. And I think something else that gets lost in the weeds of disability insurance, right? And you mentioned this earlier, retirement. So you're only going to be covered till a certain age. And so at some point, you're going to have to even potentially retire if you're disabled from your disability insurance policy. Yeah. And so if you haven't been bringing home enough money to save for that future retirement, whether you go back to work or whether you keep living on your disability insurance because you never, recovered, you do have to still plan for the future. And so this isn't just like, hey, I want to cover my most basic expenses. And it's like, well, that's great until you turn 65 and you don't have any money saved, right? Your financial life has to go on.
It's the retirement savings and also the health insurance that people realize they'll have to pay. And those are the two most overlooked and to some extent, the most expensive. Mm-hmm. So when we talk about financial planning, what would happen if we were disabled and we're trying to dial in an exact benefit amount, we need to be able to look at, all right, well, how much are we contributing to retirement? Maybe 529s for our kids. And then also what will our expenses be for health insurance? We need to make sure that we incorporate that into our financial budget.
Yeah. So speaking of financial budgets, I think it's important to talk about this because we have a lot of learners that listen to the show. Fourth year med students that are graduating, going to residency, or residents that are in training and transitioning to becoming an attending, or maybe they're in the midst of training. And we've touched on this in a prior show, but I think it's important because as I've kind of come to understand this differently, and you educating me on it, there are ways to make this very, very important financial task affordable for those that are in training and still cover themselves when they become an attending and the coverage that they need increases. So when you're having these consultations and someone shows up and they're shocked by the price of disability insurance, like how do you walk them through what their options are and kind of put them at ease in terms of the availability of paths that they can go?
Right. And we get that right out of the gate. It's when you look at the pricing, especially if you're female, especially if you're an attending and don't have current coverage, it's a gut punch. So we just take the veil off of that. We get right to it. It's just, and it's expensive because physicians use it.
Right.
To get to your point about how do we make it fit in a budget, there are certainly some things we can do. We quote a range here at Money Meets Medicine Disability Insurance. So the maximum benefit amount for a resident that's not graduating is $5,000. I remember when we saw that amount, that was what we had. When we bought my wife's insurance, that was all we could get. And so, when you and I were thinking about, what's the best way to get this in front of our clients is, we quote a range. So we can take the benefit down to $2,500 a month. So you're paying half the premium. the true value of the policy in training is not for the $2,500 or $5,000. It's irrelevant. Physicians are going to make so much money that's going to be inconsequential. But what isn't inconsequential is your insurability. And so what you're doing by moving this during residency is not only getting your training discount locked onto your policy, and later on if carriers go away with it, it can't be removed from your contract because it's non-cancelable, guaranteed renewable. So we're talking about, we go down to $2,500. We just get your policy in place. You're paying half the benefit. The other thing that we look at, and this is mainly for attendings, before we reduce benefit for attendings because they traditionally have more expenses, is we look at possibly getting rid of the cost of living adjustment rider. That's the first thing that I suggest before removing benefit. It's an expensive rider. I could do a coin flip on it when you're in your mid 40s. It's only going to pay out if you're on claim 12 months. Don't get it confused with the annual automatic increases that some carriers offer. So, there are certain ways. And then if, I've had a client in California, she's self-employed. We just dialed in a specific number for her and, we locked in her policy at that. And so we can work with you. You always want the best coverage available. You want to try to not get a policy that has an exclusion rider on it. Even if it involves paying, $25 more a month to have that exclusion rider not on your policy, take it, and we'll find that $25 somewhere else in your budget. We'll buy a cheaper bottle of wine at dinner one night. Just make up that $25 somewhere else. So we certainly work with clients all the time. Look at the price. We can discuss that, and we can dial in. Remember that their rates are a function of your age, your state of residence, your occupational class, and your gender. So the rates are, highly regulated state to state by the insurance companies. They all play by generally the same rules. But don't let price stop you from reaching out and at least having a discussion about this. Hey, is it right for me? And if it's not and you're well educated, great. Then you clients are way smarter than I am. At least if you have the education and it's not for you, at least you're making an informed decision rather than one just based on price.
Yeah, and I think that's really important and something that separates what we do at Money Meets Medicine, because it is not uncommon for people to get a quote and not have all of the options put in front of them. And so it's very, very common for people to come to us and be like, oh, the last person I spoke with didn't tell me about this option. And, I'm not going to go into, conjecture on why I think that happens. What I will say is that knowing what your options are, I think is fundamentally important. And our North Star has always been to do what's right for people, even when honestly, and I'll say this live on air, it doesn't earn us money. In fact, we do things sometimes that lose us money because it's the right thing to do.
Yep.
And that is always and always will be our North Star. And one thing I don't want to leave unmentioned, as the timing of the show is very intentional, is that you're coming up on the academic transition for July. This is going to be released in the summer. And, because of that, or, I guess I should say May, so just before the summer starts, you as a trainee, if you're listening to this, and if you're an attending academic physician, please tell your trainees this, that you have access to specific discounts, you have access to specific kinds of policies and training that you lose access to when you finish training. And so if you are listening to this show and you are a fellow, you're a resident, and the summer is coming, you're about to transition to an attending physician job, please don't sleep on this. You need to get disability insurance before you finish, because I cannot tell you how common it is for someone to finish training, send me an email 12 months after training, say, hey, Jimmy, I'm looking into getting disability insurance. I learned from your show it's super important, and I'm starting to hear that from other places too. I have type 1 diabetes. How do I get disability insurance? And I have to send them an email and be like, hey, look, I'm really sorry, but your options are not good at this point.
Right.
You should have gotten a guaranteed standard issue policy that wouldn't have looked into your medical history when you were in training. That GSI policy goes away. So Mike, I'll toss it to you to see if I'm missing anything there, but I just want to point out how paramount it is for people in training to get disability insurance.
A couple things. You just don't sleep on it. I'll handle everything for you. Just make that initial contact. I'll respond to you almost immediately. I'll handle all of the accounts will be, handled by me directly. But you go back to timing. Don't sleep on it. I had a client, South Carolina, needed a GSI, was with the standard, was at day 64 post-graduation. The standard went away. I think it was 61 or 62 days. I tried to extend it, and they said no.
Brutal.
And it ended up it would have been the right thing for him to do. But, with the client's health, you'll look at our intake form, and it's an intense intake form, and it's intense for a reason, because we're concerned about your insurability. I think that's what underscores our commitment to the client is if we have to hand you off to a GSI agent that's an exclusive GSI. And you have listeners right now they're saying that's me. And we will hand you off. But I will always be there to go over your quote, answer any questions. You'll have my cell phone number. You text, email me anytime. But don't sleep on the discounts and don't sleep on the GSIs, because they will go away and they will not be extended.
Yeah. And to be clear, the GSI is what I should have gotten. I applied as a fourth-year medical student. I have a tremor, took propranolol for it. I was going into a procedural specialty, a couple other medical things. I should have gotten the GSI. And so I hammer on this so often on the show because honestly, lots of disability insurance regret on my part, and seeing the personal finance space and the landscape and how important this is, and you can go listen anywhere. Everybody in the personal finance space for physicians is going to tell you how paramount disability insurance is. So it's really important. And honestly, if you work with Money Meets Medicine with Mike, fantastic. If you find another agent that you trust, there are a couple. I will say that they are rare. But if you find someone else, I honestly don't care. I just want you to get the disability insurance that you need. I need you to know about the GSI. I need you to get it before you finish training. And I just want to make sure that you're taken care of. And like Mike mentioned, if you have questions, email Mike, Michael@moneymeetsmedicine.com. Email me, Jimmy@moneymeetsmedicine.com. We're happy to answer any questions that you have and to point you in the right direction. And if you do want to go through the process and have Mike look through things, just to be clear, you don't have to proceed with anything. It's just information and an educational session. And Mike, your background is as an educator, so I know you love talking to people, and you often
definitely enjoy it for sure.
Yeah, and so I think that's really, really important to highlight that it is informational, educational. If you want to talk to more than one agent, that's fine. I think that you'll find different information from different people. You'll also find out that different agents spend a different amount of time working with you. So all that said, Mike, anything you want to highlight before we jump off?
No, just appreciate the opportunity to come in, Jimmy, and see you. And just want to say sorry for beating you at cards the other night over at the house. Sorry about that.
Yeah, so we play euchre, and Mike's wife, who's an anesthesiologist, and we work together, went to med school residency together. And so we're partners, and then Mike and my wife are partners, and they definitely stomped us. It was bad. It was not even close.
We took them down. We got some revenge from the last time.
That's right. Well, hey, if you're listening to the show, you realize that you've got a group policy, but you need to supplement with individual. You're in training. You want to make sure you're doing the right thing before you finish. Go to moneymeetsmedicine.com/disability. You can fill out the intake form there, and then we will be back with you shortly. And if you ever have any questions, again, shoot an email. Always happy to help in any way we can. Justin and I will see you next week. Appreciate you coming, Mike.
Enjoyed it. Thank you, Jimmy.
Justin Harvey is a certified financial planner at APM Wealth, where he helps anesthesiologists and pain medicine physicians. Dr. Jimmy Turner is a practicing academic anesthesiologist at Wake Forest in North Carolina. He's also a licensed insurance agent. However, either Justin or Jimmy are your financial planner, investment advisor, or insurance agent. This show is expressly for general education and entertainment purposes only. Nothing should be considered financial advice. All views expressed are solely the views of the guests on the show and do not represent the views or opinions of their employer.